with a question for you, Mr. Gutshall. Does Valley Bank compete in Roanoke with branches of large banks covered by Titles I and II of the Dodd-Frank Act?
Yes, we do.
And to the extent that these too-big-to-fail institutions receive a funding advantage, how does that affect your ability to compete to offer loans in Roanoke?
Well, it does make it difficult. The larger banks do have a better access to funding, not only from depositors but from other sources. So their cost of funds are less than ours. In most cases, as much as 50 basis points today, which is a huge hurdle to get over. We do compete. We compete on price, but we compete on service primarily, and we get most of our customers because they want to deal with somebody like our bank, somebody who understands their business and willing to spend time with them. So we cannot compete. I don't think we'll ever be able to compete with the Wells Fargos and BB&Ts of the world on pricing and cost, but we have to do it on service, and that's the way we do it. We've taken market share from everybody in the Roanoke MSA. That's why we've grown to $800 million, and I think we're a shining example of what a community bank can do.
When a small bank is forced to spend $1 on complying with regulations, is that $1 the bank is unable to use to finance small businesses that could create jobs?
No, we see a dollar of compliance cost or any other expense as a dollar against the profit. Profits that flow to the bottom line, we can use those, leverage them up tenfold. Every dollar of capital should produce somewhere around $10 worth of loans and investments. So it's a 10 to 1 ratio.
And a higher percentage of your bottom line is going to pay for regulations that diminish that bottom line than a larger institution competing with you. Is that generally true?
Well, I think just from an economy of scale concept, for us to comply with roughly the same regulations, maybe not to the same degree, but we have to do that as well and leverage that over $800 million in assets. A BB&T's got $155 billion in assets to do the same thing. We can't afford in-house counsel or accountants on staff to help us with this. We have to go outside. We have to pay their fees to advise us in compliance issues. So a lot of that, what we have to do, we have to go outside to get, and it's more expensive.
Now, Professor Levitin says that a lot of these Dodd-Frank regulations don't apply to small banks like yours, and that a lot of them haven't taken effect yet. But what impact is the concept of best management practices having in terms of bank regulators taking the regulations that they're required by Dodd-Frank to impose on larger banks, in which they may not have to impose on a smaller bank, but do they anyway?
Well, we realize we're exempt from quite a bit of Dodd-Frank, and we certainly appreciate that. But a lot of these things that flow through to the Federal Reserve, to other regulatory agencies, they find their way down to us as well. I mean, it's a best practices concept, and if it's deemed best practice, then we will see it, I think, without a doubt.
Mr. Pollack, what are the risks of creating disparities in the cost of doing business particularly acute in the banking industry, in which large and community banks have to compete not only for customers but also for investor dollars?
Mr. Chairman, I think it's investor dollars, but in particular it's money market funding dollars, large deposits which are not guaranteed by the government in particular, and also all businesses in which you are a counterparty in various kinds of transactions, be they securities or derivatives transactions. And in all those, as I said in my testimony, I think the large banks have an advantage which will be increased, in my judgment, by the SIFI role that has been defined by the Act.
If the banking industry became more concentrated and oligopolistic, would that harm the typical American consumer? And if so, how?
If you look around the world, Mr. Chairman, we have an unusual banking system because it still has 7,000 banks in it. Most countries have very concentrated, more oligopolistic systems. I hope we don't move in that way. And big banks have an obvious competitive role to play, but I do think there is a a special advantage in this country from keeping a vibrant, robust community bank sector.
What if we fail to do that? What's the impact on consumers going to be?
I think it takes away a major consumer and business alternative, which is dealing in a local way based on the banker who really knows his customers and knows the local conditions. That's very important in maintaining a well-functioning and growing entrepreneurial economy.
Thank you. The gentleman from North Carolina, Mr. Watts, recognized.
Mr. Chairman, I think I'll defer to the other